So deferrals and accruals are kind of opposites of each other. Did I spell that right? Is there two F's?
No, there's one and two R's.
Okay. Yeah, I was like, that does not look right at all. I spelled it right on that paper. So deferrals
And accruals.
accruals. All right. So, tell me the two types of deferrals.
Prepaid expenses and unearned revenues.
Unearned. Okay.
And accruals are accrued revenues and accrued expenses.
I'm just gonna say revenues and expenses. Okay. So a prepaid is something that we paid for in cash, but we just haven't used it yet. That's kind of our prepaid gas example.
Yeah.
And so a deferral is something where we've either paid cash or we've received cash, but we're not going to recognize it until we've either used it or we've earned it.
Okay.
So we're waiting to expense it, or we're waiting to recognize the revenue until we've either used it or we've earned it.
So we're deferring it until we use it or earned it. Okay.
Okay.
That's what it was.
So we haven't earned the revenue, so we're waiting to put it as revenue until we've earned it.
Okay.
Okay, and I'll show you examples of each of them. Accruals, so accruals is just the opposite.
This is what's actually happened.
Yeah, so this is we've earned the revenue, but we haven't received it in cash yet. Or we've experienced the expense, but we just haven't paid for it yet.
Okay.
Okay, so this is we've been paid, this is we haven't been paid yet.
All right.
But, or we haven't been paid or we haven't paid for it. So let's look at it. So these basically just help us understand, these are just kind of the different, what we'll have to do for adjusting entries. There's really only 4 adjusting entries. There's different accounts. You just have to kind of know. If you know how the adjusting entry works, then you know how to make it work.
Okay.
And so we can do a prepaid expense again. That's kind of the same thing that we did before. So what I like to do is I first so let's see, we paid cash. Let's see, how long is this semester? We're going to say 3 months. This is kind of a good example. So paid $999 cash for 3 months of rent. This is kind of what you're experiencing right now, right? The school or the apartments, well, I guess single housing for the school, they make you pay
Monthly?
not monthly, but most of the time they make you pay all up front at the beginning of the semester, right?
Oh, yeah.
So we're just going to make up a number that will be easy for us to use.
Okay.
It's about $1,000, a little less than that probably. But, so we're going to say you paid for the whole semester $999. We're going to assume the semester's 3 months.
Yeah.
Okay, so you did this on, I don't know when the semester started, but we're just going to make up dates to make it easy to understand at first. On January 1st, so we're in the winter semester.
Okay.
Okay, so what's that journal entry?
It would be crediting cash.
So we're going to credit cash for how much?
$999.
$999.
And you debit prepaid rent for $999.
Okay. Prepaid rent for the same amount. Oops. Okay. Now, on January 31st, how much of that how much of that $999 in rent have you used?
In a month, $333.
So you used $333, so we're going to put $333 a month is basically what it is. So how would we show that we've used $333 of that rent so far?
You would credit prepaid rent $333 and you debit expenses or rent expense for $333.
2 more times until you ran out, right? And then you could prepay again for a new semester or whatever. And so the idea of deferral is we pay for it up front, and then when we've used it, or it becomes something that's an expense to us, and we expense it.
Okay.
There's gonna be situations where it's not always that you've used it, can't think of one off the top of my head, but this is kind of a good idea behind it, but. Does that make sense how that one works? That was pretty easy, right?
Yeah.
Okay, unearned revenue is pretty similar. So let's just keep it on 1-1. Mrs. Jones pays you $100 for the winter. To shovel sidewalk 4 times. Okay, what's your journal entry on the 1st?
You would debit your cash for 100 and your unearned revenue account you would credit.
Credit it for 100. Now let's say on January 15th, it snows. You shovel her sidewalk. Shovel Mrs. Jones' house. What are you gonna do now?
Shovel her walk, so you would debit unearned revenue $25 and you credit revenue $25.
Yeah. See, these aren't really hard.
You just have to think through.
Because what would happen if at the end of the year we never recognized the revenue? If we just left it, we just took the cash, we never did these journal entries.
We wouldn't know how much we've actually earned and how much we still need to do.
Yeah, so if we never did this journal entry here, let's say this is the only one we missed during the year, we wouldn't have, our revenues would be understated, right? Because we wouldn't have our $25, and our liabilities would be overstated.
Okay.
So our net income would be too low, and our liabilities would end up being too high. If our net income's too low, means our retained earnings is too low. If our retained earnings is too low, that means our stockholders' equity is too low. And so,
So it's an understatement of assets?
well, there's no assets here, right?
Yeah.
It'd be an understatement of net
Revenues.
income.
Yeah, net income and an overstatement of liabilities.
Yeah, and if it's understated in revenues and income and things, that means we're understated in stockholders' equity.
And so then our balance sheet would be thrown off.
Yeah, our balance sheet would be wrong. Let's see. So, that's the other deferral.
Okay.
You wanna do some of the accruals? I don't know how far you've gotten in class so far.
Yeah, we can do some of the accruals.
Did you have like a specific question?
So, if interest of $300 accumulated on a notes payable account,
Uh-huh.
that would be an accrued expense, right?
Well, are you the one paying the interest or are you receiving interest?
It just says interest of $300.
Only the company accumulates the following adjustments. Okay. Oh, on a note payable. So you're the one paying the interest, right?
Yeah.
Okay.
So that'd be an accrued expense, right?
Accrued expense. And so let's just make it, how much was the interest?
300.
So $300 interest that's going to be due. So what's the journal entry to show that we owe $300 of interest?
Interest expense
Okay, interest expense
for $300.
for 300. Okay.
You credit cash for 300.
it say we paid it? Oh, it said it accrued.
It accumulated. Yeah.
Accumulated, excuse me. So that's where these ones get interesting. We're gonna have an interest payable. So until we pay it, we're gonna keep track of how much interest we owe.
Yeah.
But during that period, we have the expense of it, right? That's something that we have to pay, because we have to match our revenues and our expenses during the period. So if it was during that year, we owe $300, even though we haven't paid it yet, it's still an expense, right?
So in that situation, would it mean that our expenses were,
So if we didn't do
overstated?
this, what would happen?
our expenses would be understated and our liabilities would be understated?
Yeah. If you ever get confused on what to do, this is what I do. Make a fake couple accounts. So I do my expenses, I compare them before and after. I do this on tests all the time just to make sure I got it right. So let's say I had rent and interest. Got $100 in rent, didn't pay interest here, or I didn't expense it there and I did there. So before I did this, if I forgot to do this, it would show that my expenses are only $100, but I actually should have had $400. And so what happens if we understate our expenses? What happens to our net income?
It'll increase.
So it'll be overstated. And then what happens to our stockholders' equity?
It'll be overstated.
Overstated as well. And what about this one right here? If we forget to put that in our liabilities, what does that mean?
It'll be overstated. If we forget to put it in liabilities, it'll be understated.
Yeah. So our liabilities won't be high enough and our net income will be too high. Okay. That's the accrued expense.